Good evening, everyone, and welcome. It's great to have you with us tonight for the third session of 2026 ADIA Lab seminar series. My name is Khalid Al-Naimi. I'll be your MC this evening. Many of you know that this seminar series is something we usually host in person, most often at ADGM Academy here in Abu Dhabi, Al Maria Island, or at other venues around Abu Dhabi. We really value those in-person conversations and the chance to continue discussions over coffee afterwards. Unfortunately, we're not able to meet face-to-face this time, so we wanted to offer a virtual seminar instead. We know it's quite the same experience as being in a room together, but we're very much looking forward to return to in-person seminar soon. Before we begin, just a quick note on the logistics. All participants are currently muted. The question and answer at the end of the session, we'll invite you to ask your question live. At that point, we'll unmute participants individually, so you can come and ask your question directly. In the meantime, we are very delighted that one of our senior fellows is able to join us remotely this evening, Dr. Thomas Hardjono from MIT. Tonight's seminar is titled Connecting the On-Chain to the Off-Chain, and it will explore how traditional finance and decentralized systems comes together through tokenized assets, a topic that's becoming increasingly relevant for institutions, regulators, and technology developers alike. Our speaker, Dr. Thomas Hardjono, is the Chief Technology Officer of MIT Connection Science and Technical Director of the MIT Trust Data Consortium. Thomas is a pioneer in digital identity and trusted systems with more than 80 academic publications, 30 patents, and 3 books published by MIT Press. He is currently also chairs the IETF Secure Assets Transfer Protocol Working Group, and earlier this year co-released the SODA MIT white paper and interoperability standard for tokenized asset, a project that ADIA, Abu Dhabi Investment Authority Lab, was proud to contribute to. The format for this evening is straightforward. Dr. Thomas will speak for around 45 minutes, followed by 15 minutes of Q&A. So please feel free to post your questions in the chat as they come up during the talk. Once Dr. Thomas concludes, I'll invite participants to ask their questions live. And with that, Dr. Thomas, very warm welcome from Abu Dhabi, and over to you. Thank you.
Shall I begin sharing, Khalid, Emily? Yeah, let me.
Yeah.
Yes. Okay. So hopefully you folks can see this. So welcome, folks in Abu Dhabi. Welcome, folks in who's morning or afternoon, wherever you are. Thank you for having me this afternoon or this morning. Thank you to Horst and Massimo and ADIA Lab for supporting this work. This is ongoing work, but I thought it would be useful to share some of the developments that have been happening in the last couple of years along these 2 lines. So if you have any questions, we're collecting it towards the end. Just feel free to jot down the slide number, and I can always go back. And if you want to even type your question in the in the chat side window, please go ahead, and we can go over it. And I believe this recording is going to be made available, Amelie. So I think folks can always go back and look at the recording. So 2 things happening, that we've been doing work in. It's standardization of not just the token standards and the formats, but also the protocols and the needed new digital infrastructures to support these protocols and the token format. So I'm going to talk first about the efforts on designing, getting together people designing a common token format that could be used across different industries, different sectors, and then I'll talk about protocols, standardizing protocols, APIs, and so on and so on. So this effort for towards designing a token format was really kickstarted with the publication by the EU of the MiCA regulation in 2023. So this is marketing crypto assets, MiCA. And during the middle of maybe 2023, we got together a monthly meeting. So these meetings were hosted by myself from MIT, Chris Ostrovsky in London, and then more recently we've been joined by Anthony Rolfs, who just retired from Ripple. So we have considerable business knowledge and also technical knowledge in the group. And the aim of these monthly meetings was basically just to invite people to share, what kind of technology they have, how do they see the market going, what are their thoughts about standards, about token standards, APIs, and so on. So monthly meetings, and some meetings we would have 30, 40 people. Some meetings would have like 15 people, but it kept on going. An important milestone occurred in May last year, where we had a face-to-face meeting, in-person meeting of the group in London at the headquarters of Swift, and we went through some of the challenges. We even had a short workshop on how to mint your own token. So we had people from the TradFi, the traditional finance community, minting their very first ever token on one of the Ethereum testnets, which is I thought was quite interesting, and it was it changed the opinion of many people to see how tokens actually be minted so easily on a blockchain. We then had a second meeting at Sibos. So for those who don't know, Sibos is the big annual event that Swift has. It's a week-long, it's like easily 10,000 people. It occupied the entire, Frankfurt, Congress Hall for entire week. So that was very exciting. As an outcome of this, we published a report. We've been calling it the ISOTA, standards report, and you can, and it's available. So it's up there on the URL. There, if you just type in the tiny URL and that number, or if you just Google it, worst case, you go to my website, hardjono.mit.edu, and I think it's the first item or the second item on the page. And this is the list of volunteers, participants, contributors that contributed to the report. And we have Massimo from ADIA Lab, who kindly contributed his views. We're very happy to see ADIA Lab there, because part of my role is to promote ADIA Lab around the world as a center for excellence in this area of digital economy. Right, so I think it fits very well. So we're very happy to be able to have to show the ADIA Lab logo there. Okay, so that moved. So where are we in the timeline for this work? So we are kind of here. We've just finished reviewing existing specifications. We actually went through like 30 different specifications that different token communities, different smart contracts and blockchain communities have developed over time. And the idea was, the goal is basically to look at these specs and say, well, what are the commonalities that we can find among these specs, so that we can all agree on some common fields that should be present in a token. So don't want to bore you with the detail, but this is how messy it got. And so it's interesting that some fields are immediately required. So the term required means that these specs require this information to be present in the token. So for example, you say, well, a symbol needs to be there, a 4-letter, 5-letter symbol needs to be there. And then, other interesting thing we found was that there are fields that we thought would be required and mandatory, and most of them said like optional. So these are the like the areas in the brown, orange. And then there's also fields that are not specified, meaning that it was present in some specs, and in others are completely silent, no mention whatsoever. So the outcome of all of that is that we've identified a number of elements, what I would call technically fields of information, that needs to be present in a token. So that's the good news. The goal is to focus on what we call a header part of the token. So for those who are familiar with the IP internet, TCP/IP, you'll know that the IP datagram packet has a header and then a body, and the header is pretty much standard. It's fixed, well, variable length, and there's mandatory fields, source IP address, destination IP address, and so on and so on. So we want to arrive at that design where there is a common header independent of which industry or segment or sector where the token is going to be deployed, right? So if you look at the header, the same header should be applicable for somebody who's trying to tokenize bonds. Same header should be present for somebody trying to tokenize securities, right? And the body, in this case, will be dependent on the specific sector, because the information that's required, say, for the bonds industry in the United Kingdom is going to be different from the information, say, in the real estate industry, in Abu Dhabi, right? So, but we want the same header so that when somebody sees it or when a program sees it, it can pass through the header and say, okay, this is for bonds, or this is for real estate, or this is for artwork, right? So, when we're doing this work, is a part of this discussion going on for 2 years is to collect some of these key assumptions, right? So one of the immediate assumptions, almost a requirement, is that a token design must be free, agnostic to the platform, right? Meaning that a token, when properly designed, can be used to mint tokens on Ethereum, on Polygon, on whichever blockchain that you want. In fact, in my mind, it should be tokenizable even on a monolithic system like a database, right? So it should be expressible, for those who are engineering oriented, expressible in a JSON data structure that's humanly readable, right? That's how agnostic it needs to be. We want to focus on these core fields that are going to make up the header and the life cycle. So one of the challenges we met in these monthly discussions is that people had a slightly varying mental model of what the workflow looks like, particularly for the folks from the blockchain world. If you speak to experts, people who've been, say, in the bond sector for 30 years, most of the career, they will tell you there is already an industry-defined workflow that participants in that ecosystem must follow, right? And so for them, the challenge would be like, if they do want to tokenize, does tokenization affect the life cycle? Does it extend it? Does it improve delivery time? Does it improve accessibility, and so on and so on? And so for people in the traditional finance and the existing digital economy, the question would be, what is it that you want from tokenization? What efficiencies can you gain from tokenization? Is it even worth doing it, right? This is the usual discussion questions that we would meet. Another interesting requirement is that the data that's going to be in the token or referenced by the token, so I'll talk about the ART, the MiCA token, must persist. So for those who are familiar with the 2023 MiCA regulation, MiCA distinguishes two classes, let's say, of tokens. The first is basically stable coins and currency tokens. They call it electronic money token, right? And the idea is that the token is the value. If you hold it, you hold the value there, right? It doesn't point to anything else. So something like a stable coin would be a good example of that. The second type of token is what they call asset reference token. So the token is referencing, there's a pointer to something else that is off-chain, which is why we're having this discussion. But what does it point to? What is very clear, just in talking to folks, say, in the bonds industry, some of this data that's off-chain has to persist multi-year, across multiple years, right? Because primarily for regulatory and compliance reasons, right? So this brings in interesting challenges that we'll talk about in the second half, which is, how do you design scalable protocols and persistent storage. There was this question about wrapped tokens. So folks who are familiar with this, there's this idea that if you have a token on blockchain 1, someone can come along and take the information in a token, add more information around it, essentially wrapping it, and then mint it again on blockchain 2. Now, whether or not this is desirable, good, safe, does it increase efficiency and so on and so on? That's a separate question. But this came up in the discussions over the last couple of years, and I think folks from BIS, from BIS also mentioned that there's some interest. So this ended up being a discussion point where we say, well, okay, if you want to do that, then we have to use things that are consistent. Network identifiers, the names of the blockchains must be consistent, must persist. There must be a way to identify that this is the original token, this is a wrap token, right? And the other interesting thing that came up was that more challenge that what happens if people kept wrapping these things across multiple blockchains, and somebody down the line there says, okay, I'm going to wrap it again and publish it, mint it in the origin blockchain. So you end up having a cycle. So we tried not to end up talking about directed acyclic graphs, but essentially that's what is needed. Anyway, that's interesting. Some interesting tidbits. So this is what we have come up with, that we've agreed. Token needs a name, a unique name. It needs a unique symbol, like a ticker symbol that's unique. The surprise for me was the decimal precision question, right? So when you take a stable coin, when you take a USDC or stable coin or a tokenized dinar, or a tokenized euro, we need to figure out how many precision decimals do you want to be specified, right? So little things like that came up pretty interesting out of the blue. I never thought about this question. I thought it was quite interesting. The other interesting challenge is the definition of a reference, which is what the EU MiCA regulation states. And there's various proposals. Is it the usual URL thing? Is it just a hash of the information that's off chain? There's a DOI for those who are familiar with papers. Sometimes you see you read a paper, PDF. There's a DOI number. So DOI is a digital object identifier, and it's literally like a URL thing. It's DOI colon etc. And it has to persist with the paper. So a paper that's published today with a DOI should be accessible 50 years from now. And when you follow that link, there's an entire network of servers, and one of them will respond, right? So it's persistent. The DOI number is persistent, and there's some degree of guaranteed accessibility of the information. So that was an interesting discussion. Undecided, we know we need a link. These are some of the candidates that we're not quite sure, still in discussion. That's on the right-hand side. So does a token need to indicate its asset class? What do we use to identify an issuer entity, a registered entity, a bank, whatever, organization? Is it the LEI number, legal entity identifier number? Is it the VLEI number? There's this new thing called the verifiable LEI, which is not just a number, it's the number within a data structure that has public keys and so on and so on. Should the header of the token indicated that wrapping is permitted or not? So it could be that the issuer, a bank says, we're going to be minting, these stable coins, and we're going to set a flag saying wrapping is not permitted, meaning that if somebody comes along and decides to wrap anyway and put it on another blockchain, then whoever's the potential buyer can trace back and go back to the original minted token and read the actual original token, which may say wrapping not permitted, right? So seed flag, it needs to indicate that this token is the very first minted token. It hasn't been wrapped. It's the original token. And then, of course, token specifications, technical specifications always improve over time. So you'll need some kind of a version number, 1.0, 1.1, 1.2, and so on and so on. Okay, so one of the challenges in having these monthly discussions sharing the mental model of what it means to interact with a decentralized ledger, right? So the neutral, believe it or not, the neutral example we found was, we ended up using with USDC, right? So part of the challenge when we're trying to define a token standard is that we get suggestions from the audience, some of the members say, oh, why don't we, pick a use case, pick something, securities, bonds, money markets, pick one. But then by choosing one, the other folks in other industries feel that they're being left aside, right? So this is the almost the irony of it. Choosing one excludes the other. So we haven't picked any specific industry to focus on. In fact, the onus is for people from those industries, these sectors, to come and join the group, and tell us what you want. Or if you're ICMA or something like that. You have a particular asset class you want to tokenize, come and join the group and tell us, because I personally don't know all the details of what goes into defining legally defining a bond, the securities, and so on. But experts in those fields should come along and contribute. So example flow. So this is the effort of getting people to think, have a shared mental model of what it means to be minting things. And this is interesting in itself because there's some nuances here. So pick Circle, for those folks I'm sure probably know Circle. Circle could be the legal issuer and it's going to mint a token, but somebody like a Circle technically could outsource the actual mechanical minting to another company, another entity. And so we've been calling it the issuing tech. So Circle issuing tech could be a separate company, right? So, and then there's a blockchain and so on. Getting people just to agree on this basic flow is quite a feat, right? It takes some time for people to see this, but generally speaking, I think most people who attend these monthly meetings kind of agree that this is kind of the high level flow. There'll be variations when it comes to the specific blockchains, specific regions, specific jurisdictions. That's fine, but generally speaking, I understand is the Circle. There's something called a custodian. There's a thing called an issuing tech, and then there is the blockchain. Transfer is the same. Sender wants to transfer some USDC to a receiver via the blockchain. It kind of looks like this. Then redemption burning. So I have a USDC. I need some greenback cash. What do I do as the holder? I contact the issuing tech company, and then there'll be burn and destruction of the token on the block, the stablecoin, the blockchain, and then redemption of the cash to my bank account, for example. So this is quite illustrative. Wrapping has been the pain for me. This has been a bit of a headache because it seems that the pain and the complexity outweighs the benefits, right? So we're putting this sort of last, unless I don't think token wrapping is in high demand, but if there is a need, we can look at it, but this indicates that the group has looked at this and kind of agree there's certain functions like locking that needs to occur to the original stable coin before it can be wrapped in another blockchain. Okay, I'm looking at time here. So, okay, shifting over to the second part of the presentation. So that group that I've just described is called ISOTA, interoperability standards for assets. At the same time, I'm leading another group in the IETF on defining the technical protocols and specifications. So for those who do not know, the IETF is the Internet Engineering Task Force. This is a standards-making organization that's been driven by volunteers, and it's been around for 40 years. This is the organization that has brought us Web 2. So everything we use today, the browser, HTTP, HTML, SSL, TLS, every time you do shopping on Amazon, you're using TLS. That comes from the TLS working group in the IETF. If you're doing texting, in fact, underneath all of that, there's an SMPP protocol that you never see because it's so low in the communication stack. That also comes from the ITF. So all in all, in the past over nearly 40 years, the ITF has published at least 8,500 technical specifications that's being used everywhere. Cable modems, satellite communications, mobile communications, and so on and so on. And there's a strong liaison between the ITF with the ITU, with 3GPP for mobile protocols, and of course with the OSI, right? So because OSI is the national level standards organization in the United States. I believe NIST is the body that represents National Institute of Standards, represents the United States in the ISO organization. So in the ITF, we looked at the existing set of protocols. Again, look at what these startups are doing. And it became clear that everybody, every startup, almost every person was writing smart contracts to do burn and mint to transfer tokens from one blockchain to another, even though there was no common printed standard that was blockchain agnostic, blockchain neutral, right? So if you go to Ethereum or you go to Polygon or you go to, some other blockchain, you'll see functionally it does the same thing, but if you look at the actual code, the smart contract code, there's some nuances that do not get captured and are different across blockchains, right? So we thought, well, we kind of need a written standard just to describe burn and mint, right? So the idea of a token transfer is that the token in the origin blockchain must be burned, must be destroyed, and then recreated, regenerated in blockchain number 2, second blockchain, in a consistent way so that you don't have the token existing at the same time on 2 blockchains, because that implies double spending, right? That's a failure if you can have a token to do that. And so we looked and looked and looked, and several people in the group were old enough to have been around for the database development. So in the database world, the same problem occurred back in the 80s, right? So you have a company with multiple offices around the world. Each office it's got its own database, sales database, employee database, accounts database, and somebody in the New York headquarters edits, makes changes, or adds some value to a row or field, in the database in New York. That change needs to be propagated to all the other databases that's part of the network in the same company, so that all the databases are consistent. Now, this is quite a difficult problem, but the person who invented the solution back in 1978 is Jim Gray, and he came up with a thing called a two-phase commitment protocol, two-phase commit. And it's basically changes made in one has to be propagated in a consistent way such that there is some properties are satisfied, including consistency. So essentially we said, well, why don't we just steal, an existing paradigm that's already been proven for the last 40 years. It's running today in everything. If your organization, runs SAP Financials, Oracle Financials, any of those databases, this is already built in your database, and you never see it because it's just working so smoothly. So in this particular case, we're using the 2PC to do just unidirectional transfer, lock in one origin blockchain, recreate, and then burn, destroy in the origin blockchain. So I can take this offline if people are interested in the details. The other interesting thing we wanted from this design is that it needs to be able to work for private to private blockchain, private to public, or vice versa. Or one side could be a legacy system such as a real-time gross settlements, RTGS, or other kind of database. The other interesting thing is that we really cannot standardize the blockchain-specific mechanism to lock an asset. Locking means temporarily disabling it. Burning means destruction, meaning it's not wiped out of the blockchain. It just means no action can be performed henceforth. The burned asset is still there, but it's marked on the blockchain, meaning that you can go back and do audit, which is a very important thing when you start talking about tokenized assets that carry value. For this particular implementation, the messages must be signed because there's this challenge of trust. So here, G1 and G2 are gateways. One of them could act dishonestly and delay messages, delay responses, pretend it never receives a message, and so on and so on. So by signing each of these messages, digitally signing it, it's a legal act. It means that two things. It means that if you try to cheat by modifying the protocol or the payload in the protocol, you will be discovered very easily. So that secondly, this would disincentivize the gateways from trying to cheat, right? So for those who are following me, this is just Google search, the crazy amount of fraud happening in bridges. So when people talk about bridges in blockchains, it means this: transferring tokens across blockchains. And there's crazy things happening, losses amount to 500 million, I think 600 million 2023, and I think it's grown higher again in 2024. So a solution is needed. A standard protocol is definitely needed. So the specifications for this set of work is done. It's now being reviewed by the broader IETF community. So it's about between 2,000 and 2,500 engineers now have the right to review and do some suggestions, because there's always typos, there's always missing fields, or and lack of clarity when we engineers assume things when they write specs without realizing the reader may not understand some of the assumptions, and so on and so on. So there's an architecture spec, there's a core spec. So if you just Google secure asset transfer protocol, you'll hit the IETF web page. So related to this and related to MiCA. So back again to the original question: if MiCA MiCA token has a reference, what is it going to reference to? Is it a database in DTCC? Is it a database in ADIA? Like, where is it going to point to? How do we standardize it? So we've been calling this database the artifacts registry. Artifacts meaning is the metadata that supports the legal status of the asset that's being tokenized, right? So it's not the asset itself. If it's gold, it's in a custodian vault somewhere, but there's certainly legal paperwork that could be digitized, that could be readable, right? So in a sense, you could say that DTCC today and Euroclear, Clearstream, they have these registries, except these are extremely private and proprietary format, right? So it's this is one of the things we want to do is increase the decentralization of these registries and persistence of the data over long periods of time. So this is kind of what it looks like. Issuer, before the issuer mints the token, the issuer needs to, quote, publish artifacts into the registry. So that's step one. The issuer mints the token on the blockchain. Fine, it's there. And then there's an owner, and then somewhere along in the future, a potential buyer comes along and says, okay, I want to buy this particular stable coin, this particular tokenized real estate. How do I know that this is a real thing? How do I know that the piece of real estate is a legitimate real estate and not just somebody faking real estate? So I need to look at the token, follow the link, the URL, the reference, and I need to interact with this registry, which is in the red circle. That is the challenge that we're trying to do next in the IETF. How do you define common interfaces? What gets into the registry? Who has the right to publish into the registry? Who has the right to modify the entries in the registry? How do I know that whoever is publishing is a legitimate registered business, an issuer? Is it a bank I've never heard of before, and so on and so on. So these are interesting technical and legal challenges that I think the industry faces. We're trying to provide a solution from the technical engineering side. So this is the artifacts registry. So this is kind of what it looks like. It's a future work. It's going to commence in the ITM maybe middle of this year. So if anyone, any in the audience here are interested in this question, because think about, tokenized assets in Abu Dhabi, somebody in Abu Dhabi needs to operate a registry for those assets, right? It could be per country, per region. I tend to think it's going to be per country. Whoever runs those registries in Abu Dhabi needs to provide reliability and accessibility. So you have to think about replication, right? It has to persist. So information needs to be there, 10 years, 20 years, 50 years, right? These are interesting technical questions that I think any new country with, new digital economy in any country needs to think about, because, this is the future of, I think, the Web3 digital economy. So use cases. So I'm going to talk about a particular use case that is interesting. I'm closely involved in it. So just describe to you what the problem is before I talk about NF trends. So for those who are follow art, or you guys collect memorabilia, soccer memorabilia or football, memorabilia, you'll know that eBay is not exactly the most reliable source of information. And if you just look at the Wall Street Journal, you see headers, every month almost, this idea of super fakes, right? There's almost like a shadow industry developing super fakes. And if you just go to Art News, as it's a big art newspaper, you'll see this topic again and again and again. For those who are from New England, you'll see it as the Tom Brady, memorabilia bottom right there. So he was playing for the Patriots before he retired, right? So what is the problem here? The problem is the same. There is no artifacts and metadata that is authoritative, where a potential buyer can go and query and say, hey, I'm about to buy a tokenized memorabilia. Is this real? Is it fake? Can you provide me more information? Right. So this is the case of a startup actually in Abu Dhabi called nftrends.ai. Just go to the website, nftrends.ai. You'll see that there. And the goal is really, in technical language, to be an authoritative registry for metadata for artwork and collectibles, at least initially, right? And then it can, once that gets going, you can expand that to supply chains and so on and so on. And what's the pain point? It's just the high rates of counterfeits, right? Literally, I'm not a watch collector. I don't collect watches, but apparently there's a lot of people out there who collect Rolexes and so on. And the only way to get assurance is, you got to get the thing shipped to a Rolex dealer, and they're going to take it apart to provide, verification. That is not always possible for certain things, such as, artwork, memorabilia. And so the ecosystem needs to begin to address this from the creation of the item, right? When an artist produces artwork, when some Patriots are issuing limited edition T-shirts of a particular football player, they need to be involved from the beginning, because they are the authority who initiated the whole token creation. So in this particular case, what NF Trends as the issuer is doing is collecting and cleaning up and making sure information, artifact information about the assets is clear. So it's engaging art galleries. Art galleries, they have treasure trove of information about pieces coming in and out. Say the Louvre in Abu Dhabi, it's always getting loans from Louvre in Europe, and then it's getting pieces from Japan, and so on and so on. That history of the movement of the loaning and so on of artwork is very important to trace the provenance of this artwork. NFTrends also has proprietary ways to actually scan images. So I won't go into, that's a separate detailed discussion. So it's retaining not just photographic images, high resolution photographs, but also high resolution videos of parts of the item. Again, it's a growing database. It's dealing directly with artists. There's a lot of young artists who are partly digital already, and so they can immediately use the services provided by NF Trends. And of course, art reports. So if you're collecting paintings that are 100 years old or older, no one is around, from back then, you have to get reports from experts in the field of art, and that also gets collected. But the point here is that in this case, NFTrans is essentially running a private registry for artifacts metadata for art and metadata. And same for thing, right? Same for corners, but this is for a specific sector or a specific industry. I'm gonna speed up a bit to give us 15 minutes. Use case: integrity of supply chain data. So this is a pain point across different sectors. I'm very familiar with the SBOM, software bill of materials, because it's part of the work in the ITF. This is being done by SCIT, another working group in the ITF, Supply Chain Integrity Transparency Trust. So they want to develop a simple model to have some of these artifacts signed and put on a ledger. So it looks something like this, right? This is actually from their specs. I won't go into details other than pointing that they also use the word artifacts, right? We've been using the word artifacts metadata to convey that this is not the token, it's just the metadata. So it's down there in their diagram. An issuer has to publish, the metadata, either in a private registry such as NFTrans or in a public one. Maybe it's a car supply chain. People producing EV components, carburetors, airplane components, and so on and so on. So I'm going to perfect. So I'm going to stop here, and then I could. What should I do, Emily? Should I stop sharing and take questions?
Yes. So we will be taking questions now. You might want to keep sharing your presentation just in case you want to go back to a slide. But let's see what the questions are. I saw in the chat that we have a couple of questions already. We have one from Yahya Chapni. And I will go ahead and unmute you so you can ask your question. Just give me one second.
Let me bring it back to here. Yeah.
Right. Yahya, you can now unmute yourself and ask the question.
Just about it was an interesting point regarding the MiCA regulation in Europe, because I'm based here in Luxembourg. I'm part of the Silver Holdings company. It's an entity of ADIA here in Luxembourg. And we are here in Luxembourg regulated by MiCA and GDPR. GDPR is really an important point here. And I think that the zero knowledge proof, which is a protocol in blockchains, it's something which can cover this part of the identity, to do not share really a lot of information and just share the necessary information between the different blockchains and so on. Yeah.
Right. Yeah. Exactly. Yeah. So the metadata that's being published in a registry should not carry PII. Should not carry person identifying information, right? It's describing the assets, these bonds with these fields, issue date, and so on and so on, which jurisdiction. The token on the blockchain should just have, some kind of a user ID, and to verify it, yes, you could use zero knowledge proofs to do this. Yeah, definitely. Actually, if you look at some of these guys here, where's some of the people, companies, startups listed there this slide, they are already either have a product on zero knowledge proofs, or they want to promote it. And so the question for zero knowledge proof implementers is, what kind of standard can you develop for ZKP so that it becomes adopted globally? At least the minimum standard, is it standardizing some of the signature curves, some of the algorithms, what needs to be standardized. So that very, very good point. Yeah. So for GDPR and privacy is a big deal here, because one of the concerns is that, like before, if I want to buy an artwork that's $10 million or higher on the blockchain, I don't want my identity. I don't want the action of my purchase to be made publicly. I mean, this is why we have galleries, by the way, folks. I discovered that's one of the key purposes of art galleries. But yeah, no, thank you for the question. That's a very good point.
Thank you.
All right. So we have another question from Robert Barnes. I will unmute you. Just give me a second, and then you can ask your question. Right. You should now be able to speak.
Yes, how do you do? This is Robert speaking. Thank you for this excellent presentation. As we go across chains for interoperability, what do you feel are the ideal features of digital identity that we'll need to have for both private chains, but especially the public chains, particularly as the asset managers are keen to issue products on public chains because they tend not to have license fees. But for us in the financial community, we're very keen to ensure we've got AML, KYC, and lots of trust and confidence in the market. Thank you very much.
Yes, so so in the digital identity discussion group, it's another different community. Yeah, this idea of some kind of IDP version. So IDP stands for identity provider. So in the old days, IDP is basically, Google, when they give you a free Gmail account, that's your IDP. We're saying no, we need a better IDP for a particular industry that will mask out the identifying information. Right, so that if you want to issue a tokenized bond on a public chain like Ethereum, you would first acquire some kind of, irreversible identifier from this provider, which could be industry operated, and then you would mint the token using that identifier that you can then reference back to the IDP, right? So something. I don't know if you're familiar with VLEIs, that's coming up. So that is a very promising solution where you can, in fact, hide the true identity for legitimate privacy reasons from the public eye. And I think, in my view, something like VLEI, industries need to get together to define what do they call it, the qualified QVLEI issuers. You have to run your own trust issuer for your industry that interconnects with other industries. But yeah, so again, that's another effort also occurring in the ITF. Coming up, starting middle of this year, we want to standardize some of the structures of information going into the VLEI, such that the privacy of either the issuer or the buyer, potential buyer, is protected. Very good question, Richard.
All right, next we have Carlos Garcia Navarro. Wanted to ask a question. Please, he's not in this meeting anymore. At least I can't find him on the list. Then maybe we go ahead with the next question from Jennifer Eckenham. Just 1 second. I will unmute you. There you go. Jennifer, you can go ahead.
Can you hear me?
Go ahead.
We can hear you.
Okay. So I was just asking a question around currently I'm CTO for BlockPay. So we do stablecoin payroll and invoicing. So I'm just asking if, since we process payroll across multiple chains, if there's if the ITF has a secure asset transfer protocol for recipient identity across these various chains, say USDC on Ethereum, Polygon, and if there's any standard with linking the identity for compliance.
Right. So the ITF work, so it already defined a spec to do the actual token transfer, but the identity and identity verification that needs to happen before the transfer for AML KYC requirements, that is going to be done in middle of this year onwards. And that's why I was mentioning earlier that there's this VLEI proposal. So the VLEI proposal is coming out of GLIFE. GLIFE is the Global LEI Foundation out of Switzerland, where I actually think the VLEI structure is very useful for what you just described. So the sender would have a VLEI identity, and the degree of masking and hiding can be controlled on the sender side. The same with the recipient. And the key thing is that regulators can always require the VLEI holders to be registered businesses, registered entities, in order to be doing a legitimate transfer, right? Because one, as you well know, the folks that doing the travel rule, what is it? What's the big AML organization out of Brussels? They need banks and financial institutions to retain originator and beneficiary information, a FATF. So FATF requires this. I think most countries is a member of FATF, and the latest recommendation that identifies digital assets as financial instruments is, I think, FATF 2018 recommendation number 16 or something like that. So that's definitely recognized, and VLEIs could be an interesting answer to the requirements AML KYC for something like stable coins. I don't know if that helps, but maybe I'm going too technical.
No, that actually definitely helps. I think from what I understood is there's still some work in progress to happen.
Yes.
Can you hear me?
Yes. So this is where
yes. I think from what you say, what I understand is work in progress.
Yeah, you're most welcome to attend. This is the time to influence standards. I keep telling people, like, don't come in 10 years, just be done. Come today, because this is being defined as we speak. And the thing is, just like the SWIFT or the ISO 222 standards, it's going to be around the next 40 years, 50 years. So the ISO 222 standards for what is it, the interbank messaging, for wire transfers and so on, that's been around at least 30 years, right? So this is how persistent some of these standards are, and once it's persisted, it's difficult to change, right? And so this is the time to get engaged.
Yeah. Yes. So how can we get engaged?
So if you wanna send me email, or if you look at that URL, that PDF white paper actually has the information of Chris Ostrovsky, who's chairing it, myself, and Anthony, and there's a link to the ISOTA group, and it has a calendar. I think we're meeting every month now, and there's a new technical subgroup meeting every couple of weeks. So you're most welcome to attend yourself. If you have engineers, send them, because the engineers really need to be, cognizant of what's under development.
Thank you so much, Thomas. That's very helpful. Thanks.
All right. I see two people having their hands up. First one is George Subedi. George, do you have a question you want to ask? If yes, I will quickly unmute you. Go ahead, George.
I think he's still muted.
He should be able to unmute himself.
Oh, George, you need to unmute yourself now.
Okay,
the button should be.
Yeah. Yes. Now we can
hear.
Go
ahead. Yep.
Yes. So my question is the following: as we move ahead with tokenization in financial markets, how do you handle, or how do you envision this fundamental difference between the on-chain tokenization and the off-chain legal implementation, like enforcing the things that are happening in the chain.
Right, right. So on the off-chain side, one of the first things that financial institutions could do is digitize some of the important data or information, or digitizing and scanning literally paper securities, paper certificates, so that it's available, in digital form, right? Secondly, one of the things that industries could do, like take the bond industry, any industry, money markets, what they could do is, as an industry, publish a specification for the smart contracts that would mint, a legitimate bond, that would include policy enforcement, right? So the smart contract code will say, well, before the code is going to actually do something on the blockchain, it needs to check certain things. It needs to validate the status of the asset off-chain. It needs to validate the identities of the actors involved in this transaction, right? So the enforcement of the policies that govern the financial instruments need to go across into the world of the blockchain. Right? This is another sort of challenge I think that different industries need to face, right? Because right now I don't think there's any kind of mechanism, policy enforcement mechanism being implemented on the blockchain, right? Right now, you and I, anyone can mint a token on Ethereum, and there's no way to verify that information is correct. There's no way to verify whether the token is even compliant, to some regulations, say in the European Union or in a country like USA, and so on and so on. But that's a good question, George. This is why it's quite a complex problem.
Indeed. Thank you very much.
All right, I think Massimo is next.
Thomas, thank you very much for the very interesting presentation. We obviously also at ADIA Lab, and I think also at ADIA, are happy to contribute again to this work, as we wrote a piece for the white paper. But my question that came from the very beginning of your presentation is, in your work at IETF and also at SODA, are you already finding a sort of hierarchy in how the tokens need to be structured? I mean, have you defined, some pieces that need to be in every token, some pieces that need to be only common to some securities, some things that are specific for NFTs, for example, which is another topic that you have touched upon. And in a sense, this may also relate to George's question. So, I mean, if they are securities, for example, they usually have some legal framework around that. They maybe have to communicate with central security depositories, the CSDs that now are usually the registries for these tokens. Are you basically only working at a totally abstract level, or you are starting, to define also different categories?
So we're actually going deeper now. We're having continuous discussion with some of the CSDs, for example, DTCC, Euroclear, just trying to engage them to go deeper into technical design. And this is why we've arrived at this, the current state. There's a whole bunch of candidates right there on the right-hand side. We're not sure yet, which industry will need this, right? Some industry may not care about wrap tokens. Some industries definitely need, strong identity and validated identity, right? So this is part of the challenge, is getting everybody in the same room and discussing these, because in some cases they have thought about it, but they're just too busy with their day job to be spending time on this. And a lot of financial institutions, maybe in the early days of the blockchain, they might have dedicated resources, dedicated architects or engineers to do some of this work. But nowadays, most of these institutions have limited dedicated. This is the after effects of the boom, right? So if Massimo, what's it, Gartner hype cycle? Yeah, we are definitely in the plateau, the inclined plateau of productivity, which means it's a very slow pushing the ball uphill effort that's going to take, 4 years, 5 years, whatever, but my point is that we have to do such a good job because it's going to stay the next 50 years.
That's probably the right moment, Thomas. You remember that I've been involved in the common domain model. That was a similar attempt that in a sense you are inheriting something from. I've been involved in R3, and that was another moment of the Gartner curve, where everyone was committed, but probably that was too early. So now it's probably the right moment in which there has been some stability and actual standards can be set. So thanks again for the work you're doing.
No, thank you for the support. So no, we hope one of these days maybe ADIA Lab could host one of these meetings, bring all these folks to Abu Dhabi and just have a symposium just on this topic, right? I think and invite people from the region who are interested in tokenizing assets.
That's a great idea.
Any other questions, folks?
No, I think we are good.
We're good? Okay.
Handing over to Khaled.
Thank you, Emily. I think that's a great place to wrap up. Dr. Thomas, thank you very much for joining us remotely this evening and for sharing your insights. The work you and your colleague at MIT are doing on interoperability and standard is clearly going to play an important role in shaping how this ecosystem eventually evolves. And thank you to everyone who joined us tonight. If you'd like to continue the conversation, please feel free to reach out to the ADIA Lab team. Before we close, we just want to mention a quick note. We just announced the dates for this year's ADIA Lab Symposium here in Abu Dhabi. Please save the date for October 26th till 28th, 3 days. We very much hope to see many of you in person. Then more details will be shared soon and over our website. Again, thank you, everyone. Have a great evening. All the best. Thank you.